Okay, so consider this the pre-construction 101. We're just going to go through the basics of the industry and the process. I've got about 10 slides here. We'll just give a basic introduction, talk about the contractual structure and how it differs from resale, Tarion Warranty, and then occupancy phase and some of the other costs and a little bit nuanced miscellaneous stuff. We'll go through advantages to buying pre-construction and some of the risk, and then just talk about current market dynamics and how the pre-con industry has really fared in the market shift in the last 18 months. And then finally, we'll talk about the assignments, which is the resale market for pre-construction. So pre-construction is a pretty straightforward concept in theory. The buyer is agreeing to purchase a unit from the builder who agrees to build it, but it is quite legally distinct from resale simply for the fact that the property doesn't exist yet. So when you're signing that pre-construction agreement, it is actually a futures contract. You're not actually purchasing real estate when you sign it. You are agreeing to close that real estate once it is built. This needs, of course, to be dealt with in the contract, and we'll get to that in a further slide. The pre-construction is the main pipeline, the main process for new homes and condos coming to market. You do have some small custom builders who build on their own, and then you have obviously individual people who hire a contractor, hire a GC to build. But for the majority of homes, and certainly 100% of the condos, they all come through this sort of pre-construction regulated pipeline. And it does have a loose connection to MLS and realtors and the Toronto Real Estate Board. It is possible to buy direct from builders. Not all of the listings are listed on the MLS network. There is a little bit of, I don't want to say lack of transparency, but it's not, pre-construction are not held in a central database like the resale market. If you're looking for a house that's currently built, it's invariably 99.9% of the time it's listed with a real estate agent. It's listed on the MLS network, and pre-construction sometimes does, but sometimes doesn't. So there's just a little bit more lack of transparency there, and it's a little harder to access. So as I mentioned before, the future delivery poses some challenges. Obviously, a lot of this is that the house, the home, the condo doesn't exist yet, so it's impossible for the buyer to do their normal due diligence on the property. You can't see it, you can't touch it, you can't inspect it. There's a bit of a leap of faith here, so a lot of this needs to be dealt with in the contract. We don't use the normal AREA, Ontario Real Estate Association, or Toronto Real Estate Board forms. These are long, very lengthy contracts written by the builder. They can be 60, 70, 100 pages long. They generally are to summarize them, they are a long-term conditional contract written almost exclusively in favor for the builder. So the builder can have a number of different outs. It's possible for them to cancel the project. The money that you put in deposit obviously stays protected, but they can cancel the project. There have been or instances in the past where builders have gone insolvent. There are a number of outs for the builder because of this, and because it is a very complex contract. There is a mandatory cooling off period. So once you sign the initial agreement, pre-construction agreement, you take it to your lawyer who reviews it, and then the buyer has a meeting with their lawyer to discuss some of the nuances in it. And it's a good thing. It's just so that the buyer is aware of the timelines and the nature of the contract. There is a defined deposit structure, so these are almost always 20% down, and that deposit is structured to be given over time. Typically, what you have is $5,000 or so on signing of the contract, and then the balance of 5% due after the cooling off period. The second 5% is due typically within 90 days, and then another 5%, it could be 180, it could be 270 days, and then the final 5% maybe a year afterwards, and then the balance is obviously due on closing. Interestingly enough, is you don't take a mortgage on this until the building registers. So it actually allows people to sort of navigate around debt service ratios, because all you really need to purchase pre-con is a pre-approval. And let's see. And finally, so the deposit is held in trust in the seller's lawyer. So there is consumer protection there as well. Tarion is the warranty system for new homes in Ontario. It is a not-for-profit consumer protection agency formed by the Ontario government. There is mandatory enrollment for builders. You might see some small builders doing custom homes who don't enroll with Tarion, but for all condos and the majority of the large development builders, they're all enrolled in it. There are 3 levels of warranty: the 1 year, 2 year, and 7 year. The 1 year covers the finishes and the workmanship in the home, so things like flooring, countertops, walls, all that sort of stuff. That's you do an inspection when you take delivery, and if there's defects or poor workmanship, the builder is forced to repair those. 2 year covers major building systems: windows, roof, ventilation, and again, there's 2 years for those defects to show up. And then 7 year is major structural damage. So if the home is so structurally unfit within the 7 year period that it is unlivable, Tarion comes in as well. Builders are required to put money in trust into Tarion. So the way that they get that money out is by passing the inspections at these different levels. So it's very important for them that they do so. Otherwise, they lose money. Dispute resolution is done through an arbitration process called conciliation, where they bring in a third party from Tarion to negotiate a settlement between the two parties. It can take the place of a monetary payout, or the builder can be required to come back and finish the work or repair something. Criticisms, there's been some critics who have said that Tarion is a little too chummy with builders. But I think that they do a pretty good job, especially on the consumer level. If you do have poor workmanship in your unit or your house, they will come fix it. And I think as well, risk involved there's risk in any real estate transaction, and especially when you're looking out into unknowns like year-long timelines. It's just going to be impossible for a warranty to cover everything. So I think overall it's pretty good for what it is. So the occupancy phase is a key stage of the development of the building. At this point, the building is built, your unit is ready, but perhaps not all of the other units are ready, and some of the amenities, the common areas, aren't fully completed. At this point in time, you start paying what are known as the occupancy fees. You haven't closed the purchase yet because the building isn't registered, the condo corporation isn't formed. So you are essentially paying rent to the builder at this point in time. The fees are calculated off of your purchase price minus the deposit, and they basically calculate what are the costs, what would be the costs for property tax and your mortgage. So these can be quite high, and certainly in this environment where a lot of people bought when rates were very low and now rates are quite high, those occupancy fees are a shock to some people, to some buyers. Also, a part of the occupancy phase is the PDI, the pre-delivery inspection. So this is a key point for the Tarion Warranty buyer and the builder's representative. Will do a detailed walkthrough of the unit, note any deficiencies, and it's up for the builder to remediate those. I don't think enough buyers take this seriously. You perhaps should have some representation or get a home inspector. It's really going to depend on the builder. You might have very minor deficiencies. You might have some major ones, and it's up to the builder to fix those. During the occupancy phase as well, there are restrictions on selling or leasing. Sometimes you're not allowed to put leases on MLS or use a realtor, because you technically still do not own the condo at this point in time. You definitely cannot sell it. You might be able to assign it. We'll talk about that later. Through this period as well, just some other miscellaneous costs. So levies are development charges laid down from the city, and some of those are passed on to the buyer. These are detailed in the agreement, in the contract that you signed at the beginning, so they're not a surprise, but you just need to remember them. HST rebate. So because there is HST on new properties, however, there is a rebate which goes to the builder, which counts towards your purchase price. But people need to take delivery and hold them for a year, which is why you often see investors putting a tenant in and not just selling it right away. And then finally, the registration is when, at the end of the occupancy phase, the building registers. So the occupancy phase can be, anywhere from a few months to a few years. Typically, 1 year is about normal. This is when I think 85% of the units have been occupied and all the permits are closed. At this point in time, the building registers with the city. The condo corporation is formed. The buyers stop paying the occupancy fees, and actually they need the mortgage, and they start paying that. So registration and condo corporation formation are pretty key points. So the main advantages for pre-construction, first off, it's more new inventory coming in a traditionally tight market. We've been in an environment where there's a lack of inventory and far too many buyers. This has existed for at least a decade. So this offers new supply coming online, and in areas where often there is no, or there's a very small amount of homes to buy. Also offers some different selection for buyers, and this could be, different projects in the same area, different sizes, different pricing options. Even you can even choose finishes and color schemes. So that's a big advantage as well. Which is not an option for a lot of people, getting into the market unless they're going to undergo a renovation. If they're in the resale market. The biggest advantage to investors over the last few years is that because the pre-construction contract is essentially a futures contract, it's a leveraged derivative basically, with exposure to residential real estate, and it doesn't, because you're only buying with a down payment and a pre-approval, it doesn't count towards your household debt service ratio until the very, very end, when you take the mortgage and take possession. So the market and the property is appreciating, even though it's not even built yet. So this has been a huge advantage for investors, especially during the years where Toronto real estate was accelerating very aggressively. And then finally, advantage, you've got the extended delivery, which really might work for a lot of people. Everyone, a buyer might be in a position where they're not ready to take ownership now, but they know they will be in 1, 2, 3 years. There's also, as I mentioned, the appreciation factor. And then the contractual structure over time, like for the deposit, say, for example, you don't have 20%, but you've got 15% and you'll have the next 5, by next year. So that can be an advantage as well. So with any investment and any real estate purchase, there's always risk. Pre-construction is no different and also has some of its own. First off, you've got the general market risk, with the economy and demographics and interest rates, and the last 18 months have certainly showed how that's played out a little bit. Those are typically short-term disruptions to the long-term trend. And I would say that the highest probability outcome over the long term is for higher real estate prices. As well, you do have some timing risk. This is sort of more on a personal level. Anytime you're in a contract with such an extended length of time between when you enter and when you close, just things can happen in your personal life that you didn't foresee, job loss or health scare. So if you're closing a purchase of a house in 3 months, the chances of that happening are much lower than if it's 3 years. There's also a builder risk as a specific one for pre-construction. The quality is unknown when you're purchasing and you don't have the ability to do your normal due diligence. There's also the chance of the builder goes insolvent. There's been a few cases of that over the years, or the builder having to cancel the project, which leaves the buyer sort of out in left field. There's general industry risk as well, and we're seeing some pressure. Builders are having this very tough labor market. There's not enough skilled trades going around. Regulation has put a lot of pressure and a lot of more added costs on builders over the years, and they're limited in how they can pass these down to consumers, especially if the contracts are already sold. And then inflation as well, that goes to the labor market, but could also be, commodities, that adds just pressure on the industry as well. Pricing risk, I think, is a big one. So generally speaking, pre-construction prices at a premium to the resale market. Builders are accounting for future appreciation compared to now. So if you're looking at, just as an example, a condo might cost $1,000 per square foot, and the pre-construction one that you're looking at delivery for 3 years down the road is in at $1,400 a square foot. That is a risk that maybe the market doesn't get there. And I think the ways to mitigate all of these, of course, is, you always try to find a reliable builder, one with a proven track record. Someone like Tridel or Daniels, they're not going to go insolvent. They've got a history of delivering good quality buildings. Obviously, the entry price really counts as well. And that comes down to the area you're buying in, expecting that, maybe the suburbs are going to continue on the price trend that they were pre-interest rate hike. That's probably unrealistic, but if you're buying in a good area at a good price, that still might make sense. And then finally, for mitigation, obviously the Tarion Warranty offers some consumer protection as well. So real estate has changed a lot in the last 18 months, obviously, and pre-construction has been no different. It's actually new sales have slowed above the level of resale. Industry has been under pressure, as I had said, because of inflation, expanding costs, a tight labor market. I think a lot of the investment sentiment has changed largely due to interest rates. It used to be that an investor would purchase it, close it, put a tenant in who would pay for most of the cost, and it would be basically yield neutral, and the asset would just appreciate over time, sometimes quite aggressively. I think now that dynamic has changed, and you're looking at a negative cash flow on a month-to-month, which a lot of just investors can't stomach. It might make sense for some. And I think as well for investments, with real positive yields in fixed income and equities have done really well, there's just other options for investors that they might look elsewhere. Interestingly enough, though, pressures on the industry, like slowing sales, slowing demand, difficulty for buyers, probably in the end just creates a feedback loop for actually higher prices. And that if we're not building enough homes, then there's not enough homes to buy, and demand continues to grow because of immigration and demographics, and we just end up in the end with higher prices. But in the sort of short term, a lot of people can't get past the higher rates or the valuations. So an assignment is a resale of a pre-construction contract. Again, because it's basically a futures contract, it's handled differently than a regular agreement of purchase and sale. It's a relatively opaque market. There's a lot of restrictions from the builder when and if you can sell your pre-construction deal. Most of it happens off of MLS, and then it's done by agent networking amongst themselves. It is legally a complex transaction. A lawyer needs to review both the original agreement from the builder and then also help structure the actual assignment contract in terms of where's the deposit going, when's it being paid to the seller, all sorts of complex things. There are, however, especially in this time, there's some bargains available. Buyers who purchased a number of years ago were counting on rates staying low and are now having difficulty closing or paying a higher occupancy fee than they thought that they were able to. So there's some deals available. They generally sell at market value, except in rare cases we are seeing some buyers take a loss and having to walk away. But there's some deals out there with the assignments.